This is Brad Matheny. Today's the 28th. We're looking at a weekly chart on the SPY. I'll kick this down to daily. And I wanted to point out some things last week I highlighted and this week I highlighted. So first and foremost, let's go back and start drawing some Fibonacci levels. I want you to be aware of the fact that we are right now near this 50% level, which is why I warned everyone today to kind of stay in a hedged type of a mode. I also want to highlight the fact that, we have this range here, the last little move up. And remember, I'm teaching you a lot of techniques. I've highlighted the excess phase peak pattern. I've highlighted the cradle pattern. And I want you to understand that, we're looking at a pretty solid, I have to tell you here, cradle pattern down here near these lows. Now you wouldn't see it if you didn't know what the heck it is, but the cradle pattern itself is really, I'll draw it down here. So here you have a cradle pattern with this little pullback here, and it really ends right here. You come up, down, up. That's the cradle pattern in some form. So it would be down, up, a lower high, or down, up, slightly higher high. That is the cradle pattern. And what ends up happening here is we either get a breakout normally to the upside here, or we get a breakout to the downside here. Kind of like the excess phase peak pattern. In fact, I believe this cradle pattern is an early construct of the excess phase peak pattern. So now when we look at this from a bigger, broader construct, you can see that we come down, spike up, come back down, and now we spike up here. So what happens is we got a nice little cradle pattern here, and we would either then rally way above this level here, or we would break potentially downward below this low and break solidly downward. Okay. So the idea here, guys, is that we're setting up a number of price patterns that play out quite well. Additionally, we have this low to high level from here up to, let's just go to yesterday's level here. And that puts us at the 516 area or 508 area as a downside target. So, and look, notice how this aligns closely with the 25% retracement area over here. So, I'm looking that if we get that May breakdown, we're going to come right down into these levels here or this level here. I think that is very, very likely given the way that this morning has rolled out. But today, I want to highlight something even more important, okay? And that is going to be, and it's going to be the same level I talked about last week on our way up, is that I believe that this 542 to 536 level, this area right here, is critical support. I believe that level is going to be the breakdown level that we need to watch for the SPY. So if I come down here to hourly and I scrunch the chart up a little bit so you can see, we're playing through all of these patterns. Okay. And we have really rolled through a series of excess phase peak patterns. We've rolled up, as I mentioned to you, through this downward pattern here, breaking down to an ultimate low, coming up into consolidation here. Into flagging, breaking. Let me do that again. Up into flagging, big breakout, up into consolidation, and then rolled. And again, consolidation stayed right in this area, this 541, 542 area. to 535 area roughly, and then rolled up here to our ultimate high. Now, interestingly enough, you know, the consolidation range basically from here to here is the excess phase peak range, basically from here to here. So the excess phase peak ultimate high was equal to the consolidation range, peaked out right up here this morning, or as of this morning, and is rolling downward. So what we would be doing right now, I'll move this back over here. What we would be doing right now on this excess phase peak is we would be looking at a rally up down here in a consolidation, potentially moving into flagging, then moving into a breakdown, possibly back down into this consolidation zone, and then ultimately down into my low. So again, it depends here how low we go on the flag and how we break into consolidation. We could get a big gap into this breakdown. But again, what I wanted to point out on the SPY here is that I think this, I'll draw it again in a box. I think this 535 to 541, 542 area right here is the last line of defense for a breakdown. I really believe that 541, 540 area, if we get down in that 537, 538, 539, 540 area, you should look for support because it was the previous consolidation range. And I believe if we get down below this level on strong selling, you're going to look at a very strong completed breakdown over here into my May low. Now, remember, my May low is setting up, you know, kind of in this area, May 2nd through May 5th or 6th. So really right in this area. That's what I'm expecting. Okay, again, quick little update. Nice selling today. Looks like my May lows will play out very well. Remember, watch this resistance area, support area. This could turn into a very strong breakdown over the next couple of days. We'll see how things work. You know, I'm just watching this moderate selling this morning. Big little pop. I mean, it was a pretty solid rally. I was kind of concerned this morning that this market was just going to rally like mad, but it looks like my analysis is going to play out very well. Again, we need to get below this level. This consolidation level is so important. Price must break down below this low, 534, call it, in order to try to establish new lows. So we're just getting started, but it's got to break below that 534, which is this low down here, really right here, 533.98. That's going to be our most recent standout level is right there to the downside. You can see this is hourly. So we've got to break down. This is the most recent big upper gap range. This is critically important. We have to get below that level to try to get downward. So right now, let's see how it plays out. Gold and silver are moving higher. Got a couple of comments today. Gold up 30 bucks. Now up 49 bucks. Beautiful. I really don't think we're going to get much above this 36 or 3360, 3380 level. I mean, if I were to kind of show you what I think is going to happen, let's come back over here. I kind of drew these out. So let's just assume this 3380. The next day, maybe up to about 39, 3390 up in this area. The next day is a consolidation. And then I think we may end up in the 3420 area, but we have this consolidation day over here, which is going to play into kind of a sideways mode on Wednesday. That kind of gives you the idea. Today's rally maybe up to 3360, 3367, something like that, maybe. Tomorrow's rally may be up to 33.80, 33.90. Uh, Wednesday, consolidation, kind of can't get out of its own way. And then Thursday, a chance we might get up above 3,400, 3,410, 3,420. So, that's kind of the move here for gold. Silver would probably be doing the same thing. I mean, silver would probably end up rallying up here to like 33.25 today, pausing, rallying maybe up to 33.40, 50 area, pausing, consolidating, and then rallying maybe up to 33.60 or so on Thursday. So same kind of layout. All right, let's come over here. Look at Bitcoin. Bitcoin is flat, so moving slight sideways, and markets generally flat down today, playing into my sell-off. And remember, we need to get a breakdown on the SPY. We have not gotten a breakdown yet. We need to get a breakdown in order for this to play out, and we need to see price try to establish new lows. You can see real quickly. This is hourly. Remember, I can go all the way down into 5 minute or 1 minute if I really wanted to and show you this data. But you can see we've broken down below this little low right here. We've broken below this little low right here. These are each standout lows. So we are in a downtrend right now. We are breaking downward. The next low to break is this one. And if I look, the next low to break is this one right down here. So again, once we get below that 543, 542 area right here, it's a straight shot from basically this level straight down to this level. And it's assuming that price continues to rip through this support channel. So we'll see how it plays out. But very solid downward activity, playing nicely for my major low pattern near May. Love the comments, everybody. Glad that I'm able to help. I mean, I'm getting some great comments. People are just, one guy wrote me that he couldn't wait to see my video this morning. Another guy called me last Thursday, told me how he loves my videos, has been following me for months. And anyway, I'm really happy. It makes me proud to be able to have reached an audience like you guys, and to be delivering solid data, even though people don't like my squiggly charts. Oh well, I'm trying to teach you and I'm trying to explain to you what I see and how I see it. So remember, the big breakdown in the markets may not come till Tuesday, Wednesday, Thursday. So be aware that we might not get that move to the downside until really over in this area. So we might not get that breakdown until somewhere over here where it's just a sudden breakdown into that low. And we got a couple of days to play out here to see what happens. Okay, guys, that's it for the update. Go get some.